Good morning, guys. My name is Mita Gogong, your financial literacy educator, founder and director of New Ground Financial Literacy, and also your money coach. I hope you guys are having a lovely week so far. So, as we continue on our topic of savings and investment, today I would like to talk about how to best prepare yourself when you want to invest in purchasing property. So purchasing property is not just about having a home loan or getting a mortgage loan from the bank, but it can also be about you wanting to put up back rooms in your yard. You might need a personal loan for that. So how do you prepare yourself to get that personal loan in order to build those rooms, right? Okay, so number one, always make sure, and these are the things that you can do in order to make sure that your credit profile is good enough when you're applying for that home loan. Your credit score needs to be good. And according to research I did with Uber Home Loans. So Uber Home Loans is one of the bond originators. Bond originators are those companies or organizations that can help you apply with banks and assist you to actually qualify and actually negotiate correct or affordable interest rates. So what they're saying is banks can accept a home loan application from a score of as low as 610. So basically, they can be able to help you qualify for a home loan, provided your credit report is clear, there aren't any arrears, and things like that. So they are saying that anything below 610 is poor, and a score of 610 to 633 is below average, 634 to 649 is average, 650 to 669 is good, and 670 and above is excellent. So they are the experts. They know what a good credit profile looks like. So before I continue with ways that can help you in order to improve your score or to help you maybe qualify for that home loan so that you can invest towards an asset that appreciates, in order to get your credit report, you can contact credit bureaus like TransUnion, XDS, CompuScan, and XDS. They are the top 4 credit bureaus in South Africa. So what are the things that you could do that can help you improve your credit score? Number one is to always make sure that your bills are paid on time. Okay, why am I putting emphasis on the credit score? Well, the better your credit score, the higher the chances are that you will actually get approved for a home loan, because your credit score is determined by the way that you pay your accounts. As I said, point number one, always pay your bills on time, especially if you actually pay your account in store. So if you pay in store, we normally delay. It could be because of work or it could be because of other things. But when you pay your accounts in store, always make sure that you know what the due date is. So don't pay the account after the due date, because then it means that the previous month you missed a payment, you were in arrears. But if you pay on or before the due date, then you paid the account on time, then that installment falls within the accurate month. Number two, apply for a credit card or a line of credit. So I don't encourage this if you are not disciplined with credit. I don't. However, in order to boost your credit score, you need to have an account that is active. Even if you use it and pay it and use it, but it must be active in order for it to boost your credit score. It cannot remain at the same place. That's number two. Number three, keep your credit utilization at a minimum. Do not depend on credit. Do not use the full credit facility that you've got. Your clothing account, you've got a limit of 10 grand. The full 10 grand is used. It's not good. It does not look good in the eyes of the credit provider. It means you depend on credit. It's recommended that you keep your credit use up to 30%. Extremely important, 30%. If it's 10 grand, you should only be owing 3,000 on that credit facility, not more than that. Full usage, it means you depend on credit. It does not look good for you. Don't take on additional debt while taking out the mortgage. Guys, when you're in the process of applying for the home loan, don't take up any debt. Wait for the application of the home loan to be approved, to be done and dusted, and for the whole process to be fully done. Not just approved provisionally, but to be fully done, as in the money is paid over to whoever the house belongs to. Because should you take up a loan at that stage or any part of the process in between, you will be changing your affordability, and therefore you'll be forcing the hand of the credit provider to actually reconsider your bond application. So don't take up any debt. It can work against you. Don't have too many credit inquiries. So when you're in that process again, don't go about applying for a loan here and there. I think even before you start the loan application, too many credit inquiries makes you look irresponsible with your money. It means you depend on credit to live. Don't go to loan sharks, because I know loan sharks can give you money at any given time. So don't go for short-term loans, don't go for loan sharks, don't go for any form of credit inquiries. Don't close any of your accounts. So whether it's a clothing account, whether it's a credit card account, even if you're not using it, don't close it, because the history on that account could work for you. It can be positive towards approving your home loan application. Having a good credit score will positively impact your ability to apply for a mortgage. It can work in your favor, and keeping an account active actually boosts your score positively. And most importantly, guys, if you've got an account and your aim is to use that account to boost your credit score, make sure that you don't settle that account early, because early settlement of your accounts actually decreases your score. It negatively impacts your score, and therefore you will not be able to achieve what you want to achieve. I know it sounds unfair, and logic would say that because I paid off my account early, it means that I should be actually be granted more credit, and it means I'm more responsible. However, in terms of your score, it affects it negatively. So if your aim or your goal is to boost your credit score positively, it means you should pay. If you want to pay more towards the account, it's okay. Pay the minimum plus a little bit more, but do not settle the debt early. Okay, guys, thank you so much. I hope those tips help you actually prepare yourself to buy a home, to invest towards purchasing property. There is more from where this is coming from. We're still going to talk about how to prepare yourself in terms of saving, what are the pros and cons of saving, and what are other things can you actually invest into. So watch the space. We're still having our session today where we'll be talking about setting up achievable financial goals. I will be online from 5:30 today. Calling in, please continue to invite your friends and family and let them join us so that they can also learn how to best prepare them for their financial future, and also how to set up those financial goals. Join me in the WhatsApp group. You can request the link in the group and I'll share it with you guys so that you can invite your friends and family. Thank you very much, guys. I'm still on YouTube, Creating Wealth with Mita Gogong. And then please like and subscribe and share the link. Also, I'm still on Facebook, Your Personal Finances. I'm also still on Instagram, UR_personal finances. Guys, I love hearing your questions. I love hearing your comments. Thank you so much. Enjoy your day. Goodbye.